All right, greetings traders. Sam here from TradeDevils.com and TradeDevilsIndicators.com. Today in this video, we'll be taking a look at our backtestable median Renko and UniRenko tool suite. Now, before we get into some of the unique features and tools that we've built into the suite here, let's just talk about Renko bars, or bricks as they're more commonly called, just for a second before we get into it. Now, I have in front of us here, this is the Dow Futures. This is a September contract, which we've just rolled over. I'm recording this on Saturday the 12th. I've got a 12-4 median Renko brick or bar applied to the chart. Now, the attraction to Renko here, again, is this potential for what appears like easy trading, right? So you look at the chart here and you go, well, what's so difficult here? I sell it when it's red, I buy it when it's green. Okay, well, of course, right, as with most things in trading, it looks easy after the fact. But when you're in the heat of the battle, not quite that easy, right? So if you're right here, right, market's been down all day, is this a retracement or do we have a trend change, right? Right. How do you know? How would you know? Well, these are the challenges that all traders face, but particularly with Renko, there are a couple of choices that the Renko trader has to make before they even consider trading. And two of those choices right off the bat are, first, what type of Renko brick are you going to use, because there are different types. And then more importantly, once you've made the decision on the type of Renko brick you're going to use, well, the next question is, what size brick am I going to use? Well, of course, you could I suppose just choose somewhat randomly based on brick size and your risk tolerance. You could have maybe some sizes that you've got some experience with, that you have a comfort level with. I mean, there are reasonable approaches to it, but what we've tried to do here is take that randomness of that choice out of the equation and then give you a more market-focused answer to that question. So what we've done here is design a brick size calculator that's based off of the volatility of the market. So because that's such an important decision you have to make as a trader, I wanted to start there because that's one of the best features, I think, in this entire tool suite. As someone who's traded Renko for many, many years, I think if you've had any experience with Renko, you'll find this appealing. So as we sit here on a 12-4, right now, I've deliberately chosen the 12-4 because it allowed me to frame the entire day. So we could see the pre-market and then the open, and right, so again the initial balance framing that day. Well, here on a 12-4, I mean, that's a pretty good sized bar. So just for example, if you were in this trade right here, so I mean the kickback here or the retrace here, I mean that's 35 ticks, right? That's 175. So if you're in 2, 3, 4, 5 lot, that's probably more risk tolerance than the average trader is going to accept. Now you could be different if you're trading micros, but 35 ticks in the Dow, that's you're absorbing some pretty substantial drawdown if you entered here. Again, if they're going red, I'm going to sell it, and you take 35 ticks of heat, likely that's going to stop you out, right? So the 12-4, even just these little ones here, just the one bar reversal that we get here, you got 25 ticks there again. So at a 12-4, while it looks, oh my God, look at the meat of this move. Oh, if I just sold it here, well, there's 90 ticks. Yeah, I understand, right? Again, always easy after the fact, right? Are we going back into the initial balance here? Of course, right? You don't know. So the 12-4, while is appropriate here in the context of us looking, and again, it makes it look easy, that may or may not be the appropriate choice for the individual based on risk tolerance. But more importantly, is that the appropriate choice for the volatility of the market? So let me demonstrate that. So I'm going to just cut this down from a 12-4 to a 7-2. Right now here, so immediately, right, I've lost the context of the entire day. So for me to give you the whole day, I've got to scrunch it up like this. So now we see with a 7-2, we've gone from a 7-2 from a 12-4 to a 7-2. Well, we've got a lot more pullbacks here, which is not necessarily a bad thing. But you'll note here, it's a bit wickier here. We see more wicks. But I draw your attention to that because this can be a benefit, right? So when the market's moving like this, right? And you're looking to get in. So let's assume you didn't pick the turn, but what you're waiting for is that, right? If you're looking to get in, you're waiting for a little retracement so you can get on board that trend. Well, here in this case on a 7-2, with the exception of this wick that's right here, which, you know, hard to call that a significant pullback, you'd want to see something a little bit more like some of these where you had multi-bricks, but just that one, and we stayed green. But again, right, just to emphasize this, right, that's 15 ticks. Right, so if you're in that trade, that may be enough to spook you out of the trade, right? Maybe not, but it just I draw your attention to the wicks because the wicks are important, and we're going to circle back to that in a second. But something has happened at the wick to cause the wick, because as we're just driving down here, we have no wicks, right? So we have strength of trend. Now we get a little pause, but that pause, if you're not short and you're looking to get short, you're waiting for that pause. So at the 7-2, that can be advantageous, but again, what's the appropriate brick size, or are you just randomly switching? Well, market's moving kind of fast. Well, I'm going to go from a 7-2 to a 9-3. Or it's not enough. Oh, I'm going to go up to an 11-2 or 11-3 or 12-4. This is really problematic for the Renko trader. So what we tried to do is take the market's volatility and apply that to the selection of the appropriate brick size. So let me show this to you via our brick size calculator. Now, if I come over here where I've got a few of our tools applied to the chart here, what you'll see is that down in the bottom here, I have 3 different color codings. Now, I have 3 different numbers with different color codings. Now, the market's closed here, so I'm not getting any new information. So at the end of the day, our brick size calculator was telling the trader to look at the 7-2 median Renko, which is what I have applied. Now, additionally, I have our paint bars are applied here, and you can see our Renko order module here. We're going to get to those in just a second. But I want to focus here on the brick size calculator. Okay, so let's take a look at that. All right, so here we are. I've got the TDU Renko brick size calculator highlighted, so we look inside of it. Now, the 3 numbers down here are tied to these parameters and these settings, these properties here. So you'll note what we're doing is we're approximating based off of a 1-minute chart. Now, you can change this to whatever your liking is, but for a day trader, we find the 1 minute's a good place to start at the very least. So we have 3 different settings here. We have a 21, an 84, and a 336, and it's 4 times, right? So 4 times 21 is 84, 4 times 84, 336. So we're giving you 3 different reads on the market. So you're going to have a choice down here whether you want to choose the brick size based on the faster ATR or the slower ATR. Now, during the course of the day, these will change. Now here the market's closed, right? So they're all locked in at 7-2 because at the end of the day, that's what was reflected down here based on these numbers. But during the course of the day, you can see a fairly wide variety here, and it's up to the individual trader as to what they're going to choose. My preference, I will typically always gravitate to the smallest brick size in an effort to reduce the risk of just pullbacks as we were just talking about. But it's up to the individual trader and your risk tolerance, the size you're trading, whether you're trading the YM or the micro YM. I mean, these are some choices you have to make. But what we're doing here is giving you 3 choices based on what the market is doing, not just based off of some random number that you've chosen based on your risk tolerance or something that you're comfortable with because you've traded with it for years. We're letting the market dictate the brick size. That's what we're doing with the brick size calculator. So having identified that, this can change sporadically throughout the course of the day, and you can trigger an alert with it, right? So if you're in the trade and we move from a 7-2 to a 9-3, an alert can go off, and then you can quickly, and you'll see here, that if I were doing that and I was going to quickly switch to a 9-3, well, now I've got a different scenario here. And all of a sudden, it looks a little different too. One of the first things you'll notice here is that I start to get some bright colors in here. These are potential reversal bars. So that's a nice segue for me to move into our paint bars here. So once we've identified the appropriate brick size here, and now I've switched to the 9-3 here. Well, let's look at our paint bars. Now we are using the efficiency ratio to calculate as to when we transition from red to green, and then we have transitional bars in here. All right, let's go look at those. All right, so here as we look at the paint bars, now what's driving the transition from one color to the next is built into the paint bars. We're using the Kaufman efficiency indicator. Now this is an indicator been around for I think from the mid-90s, and it was developed by one of the pioneers of technical analysis. His name is Perry Kaufman. And what it's trying to do is measure the ratio of the market speed in relation to the volatility. So in simple terms, what that means is how fast are we moving and how easily are we moving. So if the market is trending, you'll often find that there will be speed and volatility behind it. So if I move this off here, as you'll note here, as we transition from one color to the next, and this is reflected here in the way we're coloring the bars, you can't get from a red bar to a blue bar without going through these transitional bars. Now we've done that very deliberately because in those transitional bars we have a lack of trend, a lack of speed. The market is struggling to find trend, so it's consolidation. So these are the areas you want to stay out of. So we're literally trying to color code it so you know when to trade, when not to trade, or to help you make those decisions. Now, is that enough by itself? Well, probably not, but it's certainly part of the decision making that you would factor in as to whether or not you want to be long here because I got 3 blue bars, or whether I want to be looking for a short. So when you see these long lines like this where we sustain that color, it means the market is moving easily without even here very small pullbacks here. Relatively, we don't get any break in that red color here. So it's just a move. It's how efficiently, right? Literally back to the name. How efficiently is the market moving? Now, if you look here at our color choices here. So when we're moving here in trend, we've got a bullish up close, we stay blue. Now if we have a bullish down close, then we factor in a color like this, so we get that yellow color here. So even though I get a new high here from the bar, I get a down close. So what you'll find is that often these bars here, these transition bars, whether it's a bullish down close or a bearish up close here, as we do in green, it's a bit of a heads up that perhaps we're looking at the transition of trend. So here, and you can see it perfectly reflected here, straight down all red. Now I get a transition bar. Well, again, I can't go from red to blue, so I've got to go through those transition colors. So as we are now working through the transition bars, you'll see here we go from the red, we get our transition bar, then we go into the light blue. Now we don't get strength of trend or full efficiency until we get to the dark blue bars. All right, it's the same thing. I'm going to bring these down. It's the same thing when you're coming down. Right? So here's a good example here where you see these bars. It's just a, hey, heads up. You know, potentially either the market is stalling. In this case, it's a slight retrace here before we continue. But note here, we go from the transition bar, we get light blue. We do not get to the dark blue as we did here. We got one blue bar here, but then we can't go from light blue to red. We got to go through this magenta color here as we did here. So there has to be a transition. So it's identifying for you the potential to see transition here. Something is happening here. We've lost that smooth speed and efficiency here. We're pausing. Now, in this case, the trend continues. Well, here's where it gets a little more challenging here, and there's more that we've designed in this tool suite to help you make those decisions there. But I'm just kind of drawing your attention to these areas here where you see that color coding here. This I think you will find this helpful. Again, note we can't get from one color to the next directly. We have to go through these transitions, right? So heads up here, right? It's not until we get to this bar here we get a blue bar. Right, we finish the day. So all designed to help you make better decisions, and when you're in a trend, stay in a trend. Because just like any trading methodology, you're going to have chop zones where you're going to take stops. The benefit here, particularly for Renko traders, is that when you're in a trade like this, you want to get as much out of it as you possibly can. So I mean, this would have been one here if you had stayed with the red bricks until you got that transition. Well, now, of course, you don't know right at that time as to whether or not we're going to just roll back over and go red again. But you couldn't get there. You couldn't just go one bar of blue and then go red again. right? If you're going there, you'd have to go through the magenta, right? This color here. So you see these transitions right in front of you as the market is trading. That's what we're trying to do, is help you make better decisions. So we're using the mathematics behind the volatility of the market to identify the appropriate brick size, and then we're using the speed and efficiency and the ease of movement with regards to how the market is trending to help identify either trend or transition from one trend to the next. All right, so that should help give some insight into what's behind these features here. But there's a fairly long list here. If you're watching this on the page from the Trade Devils Indicator site, you'll see a long list of some of the features that are built into this tool suite beyond just choosing the type of brick, the brick size, or painting the bars. So let's keep moving, and now look here at the Renko brick status. Now this is simple conceptually here. So what I can see here, if I'm in this trade, I can see exactly when I get the next red brick. So if it were not the end of the day and I was considering a short here and I wanted to enter on the creation of the next bar, if I get a down bar, well, I know exactly where to enter the market. If I'm thinking about stop placement, I know here is exactly where I'm going to get a reversal bar. So now here on a 9-3, right, you want to pay attention to that size, right? That's 20 ticks. I got that right on it. That's a 20 tick range. So if you're trading with a 12 tick stop, right, you got to factor that in. Okay, because this could the bar, again, assuming we're not closed, the bar could go down. We could go up here 16 ticks and then end up still with a red bar, right? Because we don't go far enough to kick in a reversal bar. It could still do well. So some of these bars here, where you see these wicks or like this, that's what's happening there. So you have to have an awareness of the risk here, rather than, oh wait, I'm going to sell at the market because it went red here, without having clear insight into where does the market reverse. So again, one more tool we're giving you here to be clear. Not only is this the appropriate brick size for my risk tolerance, and it's very possible that you have too much volatility if your risk tolerance is I'm an 8 tick stop trader, and you've got a 9-3 bar, well, that may not be the appropriate market for you to be trading. Right, just a little hint. So this is just designed to help you manage risk, right? Because one of the realities of Renko trading, because there's no time component to this, these moves, this could happen in seconds. Now, in this particular case, this is about 12:45 goes to 2:30 here. Well, I mean that took a long part of the day, but as you can imagine, while the market is moving, right, there's lots of little pullbacks that are going on in here that you don't see when you're looking at the bar at the end of the day. When you just say, "Wow, what a great trade that was." Well, it's not quite that easy. If you've traded Renko, you understand that. So you've got to be aware, and this is what's happening along the way. You've got to know, hey, if I'm trailing with a stop, I want to know exactly where I get a reversal bar, because what I'm trying to do is stay in the trend. Example, right? So if this were going to keep going, I want to know about stop placement. Now that might affect the number of contracts that you're trading here. If I've got that much distance to a new bar, do I want to take 3, 4, 5, or do I want to take 1, 2? Again, just designed to help you with some of that important decision making that you've got to do in the heat of the battle. Okay, so we've covered the paint bars, the brick size calculator here, the Renko bar status. And now let's take a look at the order entry module, and then we'll just finish with a little bit of nuance here and some of the ideas about trading this. Now, the advantage here of working with the dedicated TD order module is that it's designed for Renko bars. It's designed for Renko bricks. So for example here, if I wanted to buy the next market up here, if I click up, so it's going to put an order here right at that entry. So if I'm anticipating a reversal here, right, I can do this and say, okay, it's going to trigger me into the market. Now I can enter in limit or market. Right, it's your choice, right? How you would want to do that. I typically will try and get in limit first, right? Of course, you risk missing the fill, but you could use an offset here, right? So it might be a limit plus or minus a tick based on your preference. So we're giving you that capability. Now here I've just got a SIM account, but this would be your account. This would be the ATM, right? So these are all my ATMs. So this would be ATMs that you can choose that would be based. So it's easy to to change it if you wanted to. Something very easy. What tick offset you want to use? Am I going to go limit or market? And then of course just your account here. So it makes it really easy to decide where you want to enter and then the speed of which you can make that decision. So it can be I could have done a sell and up close here. So if I'd done sell up and the market went down and I wanted to sell it here, it's going to sell it as soon as it touches that. If I want to do sell down, well, as we just looked here, this would be buy up. So it's the same thing. So you're getting some flexibility here, and then the number of contracts here can be set to whatever your preference is. So this could be 10, 20, 30, 40, or 3, 5, 7, whatever you would like to set those up. That's just in the parameter settings of the order module. The default will show you 1, 2, 3, 4. This is how it will come as the default. So it just gives you a little bit of an edge. This is what we're trying to do for the Renko trader, rather than just always going in at the market or just randomly taking that gets expensive over time if you actually do the math on giving up 1 to 2 ticks every time you enter the market. Something to think about. All right, so now before we go into some of the nuance here, let's talk about the additional type of brick that we're giving you here, and then we'll talk about the backtesting capability. All right, now let's talk about the difference between the median Renko, or what by default you would see as the TDU Renko, and the TDU UniRenko. Now, I'm just in the data series here, where if you were applying the TDU Renko, which is the median Renko brick, we've got 2 variables that we can play with, right? So we've got the brick size and we've got the trend threshold. So in that case, we know that it would be a 7-tick brick, but it takes 2 bricks to get a new bar, right? So from this high to this high has to be 2 ticks. Can't be 1. If it goes 1 and doesn't keep going, well, potential for a reversal bar. So you've got those 2 variables to work with. Well, if we transition from the median Renko, in this case the UniRenko, or pardon me, the TDU Renko to a UniRenko, well, I pick up another variable. So I still have my brick size, I still have my trend threshold, but now I can decide what size of reversal I want to work with. So let me just demonstrate that a little bit here. So this is one that I use quite a lot, and I factor this in based off of what I'm seeing down here. So if I were seeing, for example, a 12-4, 11-3, and a 9-3, I would probably not be on a 6-2-9. But if I saw 7-2, if for example there was light volatility here and all 3 of these were 7-2, then I might look here. Now, of course, I could just stay with the 7-2. But one of the advantages of the UniRenko is because I get that additional variable here, I can change not only the way the bars appear, but some of the risk tolerance relative to the size of those retracements. So here, if I see a 7-2 down here and the market's slow, I like the UniRenko, so I'll go to a 6-2-9. Now, again, I could just do a 7-2-14, but I want a little bit more control over the reversal. So for example, if I went here with a 6-2, if I went up to say a 12, so I went to a 12-3-21, well, of course the chart looks totally different. Totally different, right? So 12-3-21, that's a big brick, down to a 6-2, right? Totally different. Right, now I've got more detail here, and you'll note that what I'm going to see here is more of these transition bars, right? You have to decide whether that's a plus or a minus to you. I find it to be a plus because I want to see when the market is potentially, we've lost some trend, we're retracing. If you're not in this, if you miss this, you're waiting for that. Right now, remember, we can't go straight to red. We got to get through the magenta here before we get it. Same thing here. You want those. Now you can be, this may be something you experiment with because you can put whatever you want in here. Now, I have several, and of course you can do this as just part of Ninja. You can preset these, right? So I have all of these lined up here. Same thing with Renko. So if I see this moving to a 9-3, it's just one click to go to a 9-3. If I don't like it for whatever reason, I'm not getting an opportunity to get in, well, I could go down. So I could go from the 9-3, I could go to the 8-2. Right? Right? So here, right, what was uninterrupted, well, now I got a little pullback. Right? So that might be something that's appealing to me. If I want a little bit more, well, I might go down to the UniRenko and say, well, hey, I'm going to look at an 8-3-11. Do you see how it changes? Because I'm changing how much, let me say it this way, how many ticks are required to create a reversal. So again, same example here. If you didn't get the turn here, you're waiting for that little pause. You're waiting for that to say, oh, maybe I do want to go into this market. Well, here I don't. I still. You'll note here I have up bars, but I have down closes, thus the yellow interior here. So I haven't changed the trend. I'm still getting up closes, but this is just a little heads up to me. Same thing here, right? Little bit, hey, oh, if that keeps going, I'm interested. Same thing here. I want to see these because if I go back to something, if I go back to UniRenko here and I go to a 9-3, now I lose those here. The only thing I can see, so if I take that off, now I got that little wick. But I lost that little insight into what was actually happening here. So by going to the larger bar, well, if you're short here and you can sustain that kickback, right? That kickback there is, we went through this a couple of times, right? That kickback is 16 tick, right? So if you've got a 12 tick stop, you're kicked out, right? And then the thing continues on. Now, that's very tough for a trader. If you're in the trade, you get stopped out here, and then the thing keeps going. It takes a very disciplined trader to immediately go short again after you just took a hit there. Now maybe you scratched on the thing because you were short here and you got wicked out there, but again, this can happen within seconds. So because there's no time variable here, you have to really go through it. As you're developing your comfort level with Renko bricks, is to the amount of time that took. Well, that's 12:06:21 to the next bar. That's 12:06:40. That's 20 seconds. So in the context of trading with a minute bar, right, you'd still be in the same bar. So you have to keep that in mind because there's no time component. This could take an hour. This could take a minute. Just something to keep in mind. So the choice about bricks is really a function of am I getting an opportunity to get into the trend? So if I don't see it, then I might go to a Renko, something like this, to a UniRenko where I'm going to get more of these little stutters. That's what I want. I want to see the trend, and then if you combine it with all of the tools in our Renko suite, you'll find that we have other tools that will help you identify, oh, okay, I've got a little pause, I've got a little contraction. Now trend continues, little contraction, right? That's why I prefer, of the two, I use both, but if I had to pick only one, I prefer the UniRenko because I get that extra variable. I can decide on how big a bar I want to allow for that reversal. All right, so now let's move from that. The only things I think I haven't covered, just looking down the list of the features that are built into this, a couple that I will just mention here without necessarily demonstrating. Some people prefer to have hollow candles. We built that into it. But additionally, in all of our Renko bars, we're giving you the capability to apply a tick replay. So for example, if you were using an indicator that required tick replay, that's uncommon. In fact, I think we're the only vendor that does it. It's very uncommon to find tick replay available to be added to a Renko brick. So if you, for example, wanted to apply a footprint chart, you wanted to see inside the bars and see what was happening with the order flow inside the bar applied to a Renko brick, you could do it. So you could put that footprint chart on your Renko bar and then see what's happening intra-bar based on the order flow. So that's another nice feature that we built into it. You don't see that very commonly used, but it's something to consider. You might have, for example, you might have your UniRenko here on one side and then the same UniRenko with a footprint chart on the other side, so you could get some insight into what's happening intra-bar based on the order flow. Just a nice feature that we built into it that we think makes this uniquely powerful. Now, finally, we'll finish with a look at what is an important feature if you're a strategy tester, or if you're interested in automation, or anything that would take your decision making out of it, and you wanted to look at doing some back testing. Well, these bars, right, as clearly stated in how we're labeling them within the store, well, these are back testable, both the median Renko and the UniRenko. Let me show you what, because that, if you've never seen it before, that's an important distinction to help you understand a little bit more about some of the pros and cons of Renko bars. Okay, stand by. Let's look at that. All right, so I'm back to a 7-2 TD Renko here, and if I were going to try and put together some sort of a strategy, well, of course, the first thing I would do is bring up a strategy analyzer. Now, I've already got one run here. Let's kind of make the point about the bar size, or the brick type, I should say. All right, so I've had to go back to the June contract since I'm recording this on the 12th, and we've just had the rollover. So I'm back to June, and I'm just going to run this for the 30 days of May, or well, all the trading days in the month of May. So you'll note here I'm just using I've just pulled the because it's not about what we're using here, it's just demonstrating the differences here. So I've just pulled up the default. This is the moving average crossover. None of this really matters here. The default is perfectly fine for our purposes here. And I'm running this on the June, and I'm looking at all the trading days in the month of May, and I've just clicked run, and look what we get here. Wow. Total net profit 97,945. I am not including commissions here, right? Just to make the point. So you might look at that and think, wow, these Renko bars look pretty good. I think I'm going to run this strategy. Well, here's where this distinction between just applying a Renko bar and then using a back-testable Renko bar, well, I think you'll see the distinction here. So I've run the exact same analysis here. If I pull this over, same brick type, with the exception of this being a back-testable brick type. So this is the TD Renko. It's still a 7-2, but this is the back-testable version. Now you look at the difference here. This one here, I've got a net profit of 97.45. Now here, interestingly, I still come up with a profit, but it's about a $94,000 difference. We're still profitable, still made $3,500, but pretty big difference between the two, and that's because of the way when you're running a back test, you get distorted data as a result of the way the Renko bars are formed in a median Renko. You're not getting the actual open, you're getting a false open. So it actually creates much more favorable results because of that. When you actually go to a strategy where it's using the actual open, which is what you would want to use if you were setting up a strategy to run live with live money, you want to be absolutely damn sure that these numbers are accurate. So let me pull these off here and show you what the difference is and what that looks like. So if I'm going to go back to my data series, and I'm going to go from TD Renko to TDU backtestable. TD Renko backtest. Now let me apply those. Now you see the actual opens. Now you see all the difference here. So this is, I mean, dramatically different, obviously, right, with regards to what you're seeing, because now we get the actual open. So if you're running a backtest, and this is, you know, been a problem for people for many years that weren't aware of this. So you run that backtest on a Renko chart, think, oh my God, I found the keys to the kingdom. Not so fast. Right, you've got to have an actual back-testable bar, so you're getting true opens, right? So you get a real reflection of what those results will look like. And here, while not terrible, you'd have to include commissions here to see if that was going to be a profitable strategy. At least it's profitable, but that's a $94,000 swing in results. So big distinction. This is really an important feature if you're someone who's interested in using a strategy to trade for you, or designing a strategy for whatever purposes. You better be sure that you're getting an actual result and not something that's much more favorable because it's not using the actual open and close. All right, so an important feature, something that we worked hard on to include here and build that into the suite. So we're really giving you as many tools as we think you could hope for with regards to how you would work with Renko charts, and then beyond that, you would be making a decision to include some of the tools that are built into the full Renko suite, where we're using additional momentum indicators and volume indicators, some of the other features that you can find here on the site if you were to peruse over to some of the full suites. And of course, there's training on that on this same YouTube playlist. If you want to look for some of that, you'll find that in the playlist. All right, with that, I will call this a wrap. Wish you guys good luck, good trading. Remember, you can always demo any and all of our indicators just by requesting it. We send you a fully functional demo that you can use for 5 trading days, right? Not calendar days, so if you order it on Saturday, we're not going to include Saturday and Sunday as part of those 5 days. 5 trading days for you to use it, decide whether you like it, if it's something you want to pursue. So keep that in mind. Just a simple request. You can actually do it by yourself right here off of the website. Up at the top, you'll see a 5-day free trial. All right, guys, there you go. With that, I'll wish you good trading.